Good morning. Happy Thursday. Can't believe we are quickly approaching February. Hope everyone's having a productive week. Wanted to go over interest rates, what's been going on, and what my thoughts are going into the weekend. And also wanted to give an update on medical collections that show up on credit reports. You may have heard. If you haven't, the CFPB ruled that starting mid-March, medical collections are going to be removed from our buyers' credit reports. This is great news. So now lenders are not reviewing credit reports with these medical collections and showing that the buyer doesn't have the ability to repay. This will not be in our analysis when looking at the credit report and credit scores. So what we're seeing with this is a lot of times medical collections go on a credit report because of confusion on who's supposed to be paying that bill. A lot of times it's supposed to be the insurance company, and then it tends not to be that way, and then it goes on to the collection account on the credit report. So we are seeing an average, we're going to be seeing an average of 20 points being risen on credit scores for buyers who get these medical collections removed from the credit report. And then also each year we're anticipated to have 22,000 more affordable housing or affordable mortgages being done for buyers. So what I'm doing for our old previous borrowers who didn't really qualify or didn't have the credit scores at the time of applying last year or the year before, I'm going through our pipeline and reaching out to these borrowers and seeing about pulling a soft pull come mid-March, and we'll keep you guys posted. If for some reason they had gone with a different lender, or maybe we weren't connected at that time, you'll want to reach out to those buyers that you previously had who may have been denied due to credit scores and seeing if it was because of medical collections. It's a possibility that you get some new buyers out there, so that's great news. And here's an update on rates. Here is the bond market, the mortgage-backed security market as of today. We can see last week when I was going over this chart that the mortgage-backed securities were in the upward trend, these green candlesticks, which again is good for interest rates. The higher the price of these mortgage-backed securities, the better the rate is. And so we today saw a little bit leveling off. It was pretty flat, but we are quickly approaching this dark line right here is our 50-day moving average. So we have a lot of room to move up. So hopefully we continue seeing the market and the bond market moving up, so rates start coming down a little bit. And then our 10-year is up 4 basis points today, so not too bad. We're at 4.613. Again, we want to see the 10-year going in a downward position, and that's going to be better for interest rates. And so as you can see, we had been going up the previous weeks, and then last week happened, and we started seeing it come down quite dramatically. So that's actually really good news for rates. So I thought it would be helpful to actually show the average rates right now. This is just on Mortgage News Daily. That's a free website you can utilize, go on. I'm sure some of you have already done this and watch it, but 30-year fixed rate average is a little over 7%. Please note that usually these averages are done by surveys with different mortgage companies, and they are using a 780 credit score and typically a 1-point buy down. 30-year fixed is a little over 7% at 7.35. Our VAs average 6.49, FHA 6.48, and then the ARMs are a little under 7. Typically, when looking at ARMs and the 30-year fixed rate, it's not going to make the most sense to go with the ARMs. It's not much of a difference on there. Now, we do have on Thursday morning, we have jobless claims, so we'll keep a lookout for that. And then on Friday, we have existing home sales. So we'll keep you posted on what that does to the market. And as long as we see some less than strong numbers that we were anticipating, I'm seeing that rates going into the weekend are going to be pretty flat, if not a little bit better. I don't see them really tanking or going much higher than where they are currently. We've been pretty good this week on being set at these rates and being pretty flat. But let me know if you guys have any questions or need anything. I'm around.